In this presentation, we're going to record the completion of a job and the invoicing of that job within QuickBooks Pro, QuickBooks Desktop. Here we are in our second file for QuickBooks, the second problem. We currently have the open windows open. You can open the open windows by selecting the view dropdown and the open windows list. Now let's consider what we are doing by first taking a look at Excel. We are on the 131 tab in Excel. We're going to be recording this green item down here, and the green item represents the job 14 that had been completed. So record sale of job 14 for cash. We're actually just not going to use this 380, but the 30% markup in order to sell it. So the bottom line is job 14 has now been completed. We need to record the sale of it. Now notice what we're not recording here as compared to the prior job. We're not recording this journal entry as we did last time, which was to move something from work in process to finished goods. We don't need that because we didn't record anything into work in process. It's already all the way down here in the cost of goods sold. Then we're going to record the sales half of the invoice, which we did last time, although again, we'll change the amount to make it a 30% markup as we've been doing that in the problem. So that'll be slightly different, but otherwise the first half is the same. The second half, not there. Notice, just like when we sell inventory, if we had something in finished goods up top, there's two parts to the sales transaction that would happen if you're selling inventory. One would be that the accounts receivable would be going up, or we would get cash, and the sales would be going up, revenue would go up. The other half being cost of goods sold, the expense would go up, and the inventory, in this case the finished goods inventory, would be going down. Notice we don't have to record the finished goods inventory going down or the cost of goods sold because we didn't do this we just took it directly to cost of goods sold. This is how you can see it's a timing difference, right? It's all going to end up in cost of goods sold at the end of the day anyways. We basically took it to cost of goods sold straight from the start, and therefore we don't have this transferring problem. So that means it's a bit easier or takes a bit less transactions to use this type of method, although you got to be careful to be reconciling out and make sure you can reconcile out the cost of goods sold here to the job sheets. So therefore, we're not recording this one. We will record the receivable. Now, if we go to the job over here, which job has been completed, we're going to say that job 14 has been completed. So that means that the job 14 had a cost of the 191, 140 here. We're going to mark it up by 30%, and that's going to be the sales price. So we're just going to take that 191, 140 and mark it up by the 0.1, and that's going to be this calculation here. So if I was to do that with a calculator, obviously we're just taking the calculator of the 191, 140 times the 0.3 plus the 191, 140. And that's what we're going to say, and that's the 248, 482. That's what we're going to say that our agreement with the client was. We're going to get our actual cost at the end of the day, and then we're going to mark it up by that 30% for our amount. So if we record this, then we have the first half of the transaction. Again, this is the same transaction. If we sold something, if we sold inventory, we would basically have these two halves that we typically often see the transaction broken out into. So I'm going to debit the accounts receivable. Accounts receivable is going to go up. We're basically issuing the invoice. The other side is going to go to sales, which is our revenue account. Revenue account goes up in the credit direction. And so this is a credit, not a negative number here. This is the debit of cost of goods sold. The difference between the two is net income. So note the cost of goods sold is already recorded. However, it's not just recorded for that one job. It's also recorded for all the open jobs for the current time period. So in other words, we don't have to record the second transaction, the cost of goods sold going up, and the finished goods. It's already down here, right? It's already down here for this job and other jobs. That's the timing difference that we've been talking about through this process. It's already in the completed or end area down here. So if you want to adjust anything, adjusting entries, as we'll talk about next time, you'd have to account for basically that timing difference. And as long as you can reconcile the reports, should be able to do that without a problem. And again, no matter what you do, you're probably going to need adjusting entries at the end of the time period for taxes and for possibly accounting, accrual accounting, adjusting entries as well. Now let's take a look at our job cost sheet. So if we scroll over to our job cost sheet, then we're saying this one is now closed. Now, what I want to do is I'd like to indicate the items, the jobs that were opened during the time period, so I know which jobs were opened during the time period and the ones that are now closed. So I'm going to say that this one, at the job 14, is now closed and shipped, one of these two. I'm going to highlight this one to indicate that it's closed and shipped. There we have that. Now, if we reconcile, what we want to do, note that this amount down here in the cost of goods sold represents basically all the cost of goods sold that are allocated during the time period as they are incurred. So in order to reconcile this, we want to keep all the total open jobs during the period, which consists of all three of these jobs that were open during the period, although this one is closed now. And then we're going to reconcile using the beginning balances. So this is what's on the trial balance. And then we could still reconcile with what's the beginning balances here. And that's going to be our reconciliation process. So let's do that same kind of thing within QuickBooks now. Same kind of activity in QuickBooks. We're going to go back to QuickBooks. The major thing we want to do before we do that is obviously we want to record this journal entry, the accounts receivable, and the sales. And we want to have some indication in the job cost sheets to be able to do our reconciliation process and indicate the jobs that are open and closed during any particular period. So we're going to go back over here. We're going to first enter the invoice. So we'll enter the invoice. Now there's a couple different ways we can come up with the sales number on the invoice. You'll recall we entered an estimate over here. And when we did the estimate, I'm going to go back to the one for 14. We said that there's going to be a 30% markup. And I should have done it for all three of these. I'm going to add it now. But there's going to be a 30% markup. We're not going to use it. But this is one way that you can do it. You could say, hey, this is our estimate for the job. This is what we think it's going to be. There's a 30% markup. That's what we'll bill you at no matter what happens at the end of the job. And then you can use this estimate to bill out. That's one method. I'm going to save and close this, and I'll show you that. Yes. And then the other method that we could use is with every check we wrote, you'll recall, every check that is going and bill that's going to an item, then we said that was billable. That means that we can populate an invoice with those billable type of items. And that's the method we're actually going to use here as we did in the prior problem. So I'm going to close this back out. And in order to do this, let's first take a look at our trial balance and let's take a look at our job cost sheet. So we're going to go to the reports up top. We're going to go down to the accounting and taxes and a trial balance. We're going to change the dates up top from 01/01/20 to 12/31/20. There's our trial balance. There's the $674 and a cost of goods sold. And now we're going to go to the reports up top. We're going to go to the jobs reports, and we're going to go to the estimated versus actual summary. And there is our 757, the difference being the beginning balances in the total costs here. So now let's create our invoice. Well, let's do one more report. Let's go to the reports drop down again. Let's go to the jobs report, and let's do the job report for the one that we're actually selling. Job estimated versus actual. And we want job number 14. So we're going to go to job number 14, if I can do that. And there we have it. So we're looking at the actual cost. Now, what we're going to say is if you're billing someone based on the actual cost, and you told them, hey, we're going to mark it up 30%, you say, hey, this is the actual cost, the 191,140. I'm going to take that amount, the 191,140, and times 0.3 plus the 191,140. That's going to be what we charge. Or in other words, 191,140 times 100%, 1.30, 130%, which is going to be that 248,482. That's the amount we invoiced over here, or the amount we recorded, 248,842. Back to QuickBooks. Then we're going to record that on the invoice. So we're going to go back to the home page. We're going to create an invoice. Now, there's two ways, again, we can do this. I'll show you both ways. First way, which we're not going to use, if I check 14 as the job, it then brings up the estimate. We don't want to use the estimate. We want to use the actual. But let's just see what the estimate would look like if I select that and say, okay, you don't have sufficient quantity. Okay. I'm going to close this. And note, there's basically our estimate that was drawn in from the estimate. Now, there's kind of an issue with the quantity here on the invoice, because what it's going to do is try to deal with the inventory to record this. So you might need to work around. We could work around that by just basically taking it to another account. But I'm not going to get into that now because we're not going to use that method at this point. We're going to close this back out. I'm going to close this back out and then use the method we want to use. So I'm going to close this back out, no, and then I'm going to create the invoice again. We're going to put it in there for job number 14. Not going to use this one. I'm going to say no, just close out of it. Then it says, do you want to use all the billing items? That's the one I want to use. So I'm going to say yes, that's the one I want. Okay. And then I'm going to go to the 9 items over here. I'm going to select all of them. So there's select all in the items category, and then OK. Now, although this can be useful, you want to, of course, double check this. And what you want to be doing is tying this out to the job cost sheet. And you'll note it won't tie out here. If I go to my job cost sheet over here, it should be at the 191, 140. And it should be totaled out as direct materials, direct labor, and factory overhead. So it could actually be easier to just enter these items straight out into the invoice, or you can keep the invoicing process here. Note what's off here is the direct materials. The direct materials are going to give us a problem because of that inventory tracking thing that we set up. So if we go back over to the invoice, note that all the direct materials aren't in there. Not only that, but if I was to record this invoice with this 14 in the materials, it's going to try to remove it. It's going to try to record 2 sides of the transaction. It's going to try to decrease the inventory and record cost of goods sold. I don't want it to do that. All I wanted to do is record the sales half of it because we've already recorded the cost of goods sold side of it. So what we need to do is basically we need to make another item, the item that's going to be used simply for the invoicing as opposed to the tracking of the inventory. So I'm going to create an item for direct materials that's going to be the item that we're going to use for an invoice. I'm going to call it direct materials invoice. I'm going to say tab. I'm going to say QuickBooks doesn't have it, so we're going to set it up, of course. Now, I'm not going to make it an inventory item. I'm going to make it a service item so that we don't have an inventory factor on the invoice. And then I'm just going to put the rate. We don't even need the rate here. And I'm going to put the amount or the other account being income. So it's just going to charge the income account. No cost of goods sold, nothing fancy going on. We're going to say okay. And then I'm just going to manually put in the quantity the quantity was, we need 114. I'm going to do the calculation. 114,000 divided by 1,000 is going to be the 114 that we need. The rate we're going to put in at 1,000, and there it is. So that gets us to a total of 191, 140. If I go back to the job cost sheet, that is where we're at, 191, 140. Now we need to mark it up by the 30%. So I'm going to take that amount. I'm going to say this is the 191, 140 times 0.3, mark it up 57,342. So I'm going to go back over to the invoice and say that we need a markup. And yes, and that's going to be, I'm going to keep it at a service item. You must specify the account. It's going to be going to an income account. And we'll say okay. And the markup is going to be, you can calculate it here. It's going to be the 191, 140 that we're picking up down below. And we're going to multiply that times 0.3 or 30%. And that brings us to the 248, 482. And that should match what we have on Excel, 248, 842. So that's look good. That's how you can basically tie out the invoice. And you want to be taking it and tying it from the job cost sheet, making sure that, you know, those two things are, you can explain the invoice related to it. So then we're going to say save and close. Before we do, what is this going to do? It's going to increase accounts receivable, and the other side is going to go to income. It's going to go to income. It's not going to do anything to cost of goods sold or inventory. So we're going to say save and close, and yes, and okay. Can't do that because we need to uncheck the print later and the email, and then save and close. Okay. There we have it. Let's check it out. If we go to the trial balance, then we then have in the income, there's our 248, 482. That's going to be here. And if we check the invoice at the bottom, there it is. Closing this back out, closing this back out. Here's our accounts receivable. Double clicking on that. There's our accounts receivable. Closing this back out. We still have the cost of goods sold here at the 674,000. And that can tie in then to the job cost sheet. Now, if we go back to the job cost sheet here, note that we might want to indicate, if I go to the job cost summary sheet, then we can indicate then and see how we want to filter this. Note that we want to keep this 757 so that we can tie out to it. And remember that 757, if I go back to our Excel sheet, is going to be the sum of all the jobs that were open during the time period. To reconcile, we need to take out the beginning balances, which is that 83. So if I go back over to QuickBooks, the beginning balance, you recall, is the 83. So if I take, in other words, the 757,000, and then I run this report for 12/31/19 to 12/31/19. There's that 83 minus the 83,000. That's our 674. That 674 is what is currently on the trial balance. So that's what we want to reconcile to. So what we want to do then is indicate that this job is closed, but we might not want to actually put the status as closed until the end of the year, and then close all the statuses for all accounts that were active during the period. So what would that might look like if we go to the company up top and we go, the customers and the customer center. Then I'm going to take a look at job 14, and I might want to just indicate the year it's closed. So you can indicate it with a closed or just a C if you want. And then I'm going to say 2020 is going to be the year that it was closed in. Now, what we want to do at some point is go to the job down here, and we could adjust the in progress. But right now I'm going to keep it in progress so that it'll show on the job report during the current time period. And then at the end of the year, I would basically report it as closed, and then we can use the filtering options as well. So I'm going to say okay, and then I'm going to go back to the job reports. So if I go to the job report, so we're in the job estimates versus actual summary. I'm going to change the dates here, or the dates are going to be running 01/01/19, the prior year, and 12/31/20. So for the full 2-year time period. So it's going to show all our reports for that time period. We've got the amount that was closed. So this is going to be the amount that was closed, and we can indicate that here. We have the 757,000, and this is going to be for all jobs that basically had activity in them. We're looking for all the jobs that had activity in the current year. So in other words, if something closed in the prior year, we can then filter it and say it's going to be closed. So at the end of this year, 2020, we would want to go into all the items that were closed and change the item to a closed status. So if I go to the customer report then, and I go into here, that would be changing it to the closed status. So the job down here, and then we could change it to the closed status. If I did so now and said okay, and then went back to the job report, and this job report, then we can adjust this by the closed status. We could say, I want to customize the report, I want to filter the report, and then I want to see only the statuses that are open by going down to the report status or the job status here. And then I would like to see just those that are in progress. And I could say, okay. So, and that will filter it out. But I would like to see that showing up on the report until the year end. So anything that is closed at year end, I would like to change it to the year that it was closed on and change it. And anything that is still open, we'll keep them open here. So what I would do is then go back to the customer center and then back into this report, go back into the job filters, and I'm going to keep this one in progress so that it still runs in our reports as we see here, and it'll still run in that filtering option will only filter out the jobs that were closed in prior years. So if it was closed in 2020 and I'm looking in 2020, I want to see it here and represented basically with the closed item here. That will allow us to reconcile this 757 to our trial balance. Now also note, you could run the report, you could run this for 01/20 for the current year, and you could say, well, the report reconciles right there because now we have the 674,000 that ties out to the 674,000 on the cost of goods sold report. So that is one way that you can reconcile these two items. I'm going to go back to the job cost report. However, this 674,000 represents jobs that are partially completed. It doesn't show us all of the costs for job number 14 because some of those costs were applied to the prior year. And if I need to do an adjusting entry at the end of the time period to take us to an accrual basis or a tax basis or percentage of completion or whatnot, I would need to know that amount. I would need to know that reconciling amount. So this would be useful. This is a useful reconciliation, but we would like to see basically the tying out of all basically the open reports during the time period, and then be able to reconcile in this format. And if we reconcile in this format, so we have this reconciliation, then we can kind of convert our reports into an adjusting entry at the end of the period. That's what we'll do next time.